Can we be honest for a second? You feel it, don't you? Something's off. Markets are at all-time highs while the real economy feels shaky. Prices are insane. Debt is everywhere. And everyone's pretending everything's fine, sipping champagne on the deck like the ship isn't listing. But you're not buying it. You see the cracks forming. You feel the iceberg ahead. The question isn't if something breaks, it's when. And here's what I've learned after years of watching cycles. The difference between financial ruin and generational opportunity comes down to what you do before the chaos starts. Not during, before. So, today I'm giving you 7 emergency moves to make right now while you still have time. Let's go. Move number 1. Build your fortress of liquidity. I know, everyone says cash is trash, inflation is eating it, you should be invested. And yeah, in normal times, sitting on cash isn't ideal. But in a crash, cash is ammunition. When markets collapse and everyone's frozen, watching their portfolio bleed, you need the freedom to either A, cover your expenses without selling assets at rock-bottom prices, or B, go on offense and buy quality investments while they're on sale. Your goal? 3 to 6 months of living expenses, parked in a high-yield savings account or money market fund. This isn't investment money. This is your financial oxygen tank. It keeps you calm, it keeps you alive, it keeps you from becoming a forced seller, the exact prey that wealthy investors feast on during downturns. Build the fortress first. Move 2. Wage war on high-interest debt. That credit card balance at 20% or 25% interest? It's a ticking time bomb. Right now, while you're employed, you're managing it. But in a recession, jobs disappear, income gets cut, and that monthly payment you could barely afford becomes an anchor dragging you under. Every dollar of high-interest debt you kill right now is a guaranteed return no stock can match. Consolidate it, refinance it, throw every spare dollar at it. Enter the storm as light and maneuverable as possible, because when things get rough, you want options, not obligations. Move 3. Audit and stress test your budget. Here's the uncomfortable truth. Most people have no idea where their money actually goes. Vague sense of income, blur of expenses, financial fog. Fix that now. Pull up your last 3 months of statements. Categorize every dollar. Then ask yourself one brutal question. If my income got cut in half tomorrow, what would I eliminate? Find the fat, the forgotten subscriptions, the lifestyle creep, and create a recession mode budget on paper before you need it. Because when crisis hits, you won't have mental bandwidth to think clearly. You'll just execute the plan you already made. Look at your portfolio with cold, surgical eyes. What do you actually own? Is it a pile of speculative growth stocks that have never seen a real downturn? Is it concentrated in one sector, like tech? Now is the time to consider rebalancing toward defense. I'm not saying sell everything and panic. I'm saying tilt your allocation toward assets that hold up better when things get ugly. Think dividend-paying value stocks, consumer staples, food, household goods, utilities, healthcare, maybe some government bonds or commodities. Ask yourself, what do people need to buy no matter how bad things get? Food, medicine, electricity, toothpaste. Companies providing those essentials tend to survive and even thrive when discretionary spending collapses. You don't need to rebuild your whole portfolio, just stress test it. Move 5. Fortify your income streams. Your job is your biggest asset, so protect it. Make yourself indispensable. Take on projects, develop new skills, become the person they cannot afford to lose. But here's the bigger move. Start building a second income source, a backup generator. Maybe it's freelance work in your field. Maybe it's a small online side hustle. Maybe it's monetizing a skill you already have. You don't need to replace your salary overnight. You just need something that kicks on when the main power goes out. That one move, having income that doesn't depend on a single employer, can mean the difference between weathering the storm and being swept away by it. Start now, even if it's small. Move 6. Write down your investment plan and commit to it. Decide now, while you're calm, exactly what you'll do when the market drops. What will you do at minus 10%, minus 20%, minus 30%? Will you sell, hold, buy more? Put it on paper, because when the crash actually happens, your brain will be hijacked by fear. You'll watch the terrifying red numbers and every instinct will scream, sell, get out, stop the pain. That's exactly when most people destroy their financial future by panicking at the bottom. Your written plan is a letter from your rational self to your future panicked self. It says, we expected this. Stick to the plan. Write it, print it, and put it somewhere you'll see it.
And finally, move 7. Weaponize your mindset. This is the shift that separates victims from victors. You have to start seeing a crash not as a disaster, but as the greatest wealth-building opportunity of your lifetime. The assets you've always wanted, shares of great companies, real estate, solid investments, they go on sale. The price of entry to the Wealth Building Club gets slashed. But only the prepared can take advantage. The cash hoarders, the debt destroyers, the budget warriors. That's who you need to become. The storm is coming. It will be brutal. It will wipe out the unprepared. But for you, the one who took action while others slept, it will be the moment you separate from the herd and start building real wealth.
So let me ask you, will you be a victim of the next crash or a beneficiary? That choice starts with what you do today. Pick one move from this list. Start this week. Thanks for watching. Now go prepare. I'll see you in the next one.